heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Live from New York, this is Bloomberg Technology. Coming up, Nvidia says its new chips are on track, but the rush to get the product lineup out the door is proving more costly than expected. Plus, Bitcoin rises to new heights as the Trump transition team weighs the creation of a dedicated White House crypto post. And the CEO of Palo Alto Networks joins on the heels of its earnings. We'll discuss how AI can help stop the threats of the future. But first, we get straight to the world of Nvidia. And indeed, the points drag that it's having on the Nasdaq is somewhat. We're off by 0.8%, but it's been a volatile day of trade as people try to pass ultimately how strong future growth still looks under Nvidia, and indeed the supply side headaches that much has been discussed. Let's get straight to it with Ian King. And look, we'd all been fretting about Blackwell, the product lineup, how easily it is to get into customers' hands. Did Jensen Huang manage to calm investors' nerves?
I mean, obviously, to an extent, we haven't seen the massive fall-off that we've seen manifest previously with concerns. He talked about, we're getting it to market, and we're actually going to be probably getting more to market than we had thought we would. At the same time, it's going to cost us.
Yeah, let's just weigh in on the profit margins, because you do such a great job at giving the context here. Ultimately, this is a company that gave us 94% increase in revenue in the third quarter, guided to another 70% increase, give or take, plus or minus 2%. But the profitability is what, just coming down ever so slightly to what, 73 to 74% margin?
That's right. I mean, I think that's the right way to look at it. They've set such high expectations, right? They were at 75%, which had narrowed slightly, but 75% is like software margins, right? This is a semiconductor company, right? AMD is 20 points south of that. Intel isn't even in the same zip code right now. So, yes, they're losing a few points because they're spending more on engineering to get those chips out, get those systems in place quicker. But really, this is a very, very high bar.
And then full production comes, the back end of their fiscal 2025, Ian. But I suppose they still have to address the issue that, sure, they're getting them out the door, but it's to the same kind of companies. How are they managing to diversify their demand base?
Well, I mean, that was one of the things that we saw in the release. They're not, right? The amount of revenue coming from those big companies, the Microsofts, the Amazons, has actually gone up from 45% to 50%. So like half of the most important division that they have is dependent upon just a few companies. Investors are definitely concerned about that. Why they're concerned about that? Because these companies are making their own chips, trying in effect to replace Nvidia and everybody else that supplies them.
Yeah. Is there any real competition here? Because we've heard it time and time again that as much as AMD tries, as much as Intel tries, really Nvidia is the only game in time for the here.
Yeah, I mean, that definitely appears to be the case. I mean, any questions about end demand, any questions about losing market share were just irrelevant, right? I mean, they talked about incredible demand that they cannot meet right now. So, that part of the story is really in the future, if at all. Ian
King, very much in the present when it comes to the market move. We really appreciate it. Thank you. Look, let's get you more context on what it means to the rest of the market. Ipek Oshkodeshkia is with us, senior analyst at Swissquote. And Ipek, we turn to you for the broader market implications, because we were anticipating as much as a $300 billion market cap swing, up to 8% move higher or lower. Actually, a lack of volatility must be a slight sign of relief.
Well, actually, it is, because there has been a few red flags in yesterday's report, as Ian was just talking about. The pressure on the productivity levels due to the manufacturing challenges for the Blackwell chip is one of them. The fact that the big technology companies make up to 50% of Nvidia's revenue is another sticky point. Yet the results have been strong. And despite the small red flags that we got yesterday from the report, well, the aftermath, the immediate sell-off has been only 2.5%. And this morning, we don't see that the Nvidia shares are being sold at the level that we would expect them to with such a disappointment, or with the small disappointment from investors. We would think that any misstep would be a big sell-off, yet we just see that the market is quite resilient.
We got a bit too used to him managing to smash expectations that he had set and that of the market. And look, he only beat them slightly when it comes to their own internal guidance. Ipek, the rest of the market, though, had been anticipating, well, maybe a questioning around valuation. What do you make of the fact that we're still up, let's call it 200% over the course of this year? It's an extraordinary run-up for one particular company. Can it be sustained?
Well, it is absolutely an extraordinary run-up. And now we are questioning the valuation levels, especially if the demand started to slow. This is not the case right now, but at some point, we expect that the demand from the big technology companies will start slowing. And because this is a big chunk of the company's revenue, that's going to be a headache. There's another thing. Right now, the competition is not a problem because Nvidia's got the most expensive, but the most premium chips. They've got the best performance, and the big technology companies are looking for those. But if the demand was to slow for the big technology companies, then Nvidia will have to find other customers. And these other customers may not be looking for the premium solutions. They will be just looking for the solutions to manage their day-to-day businesses and increase their productivity and decrease their costs. But they would also opt for maybe more cost-efficient and, well, slightly more affordable chip solutions than the Nvidia offers. And I think that that's going to be a major issue.
We're going to be talking exactly that later in the program, Ipek. For now, when we think about the context of Nvidia, about 20% of all the run-up in the S&P 500 is thanks to this one particular name this year. About 25% of all earnings per share increase. How key man risk is Nvidia, and how does one protect themselves against that?
Well, obviously, the AI rally, and especially Nvidia, has been one of the major pillars of the market rally in the US that we have seen over the past 2 years. So any lack of appetite for Nvidia from now on is going to have a negative impact on the market sentiment. Now, we have seen the AI rally broaden toward the other sectors, other non-technology sectors. But it's worth noting that this company has added so much upside pressure to the S&P 500. So anything less than, so any kind of loss of momentum here will obviously be, well, quite negative for the S&P 500, especially knowing that the S&P 500 today is struggling near its all-time high levels.
So when you're sat ultimately in Europe and you're thinking about a global perspective here, should people be broadening out when it comes to just Magnificent Seven, let alone just Nvidia, let alone just US bets on technology?
Well, when it comes to technology, I really believe that the US is still in a very dominant position. So you wouldn't be going to Europe for technology solutions. There's one place that we actually like, and that's Japan, especially given that the government there is going to give some more support to their technology industry. So in terms of geographical diversification, Japan could be a good solution. There is China as well that we had been looking at, but we are still not positive for China because, well, the chip war has weighed greatly on sentiment and on the progress of the technology advancements there. So we are not really looking at China right now. So one place that investors could be looking at would be Japan. But other than that, the US is still in a very dominant position. So if you want to invest in tech, well, the first place you would like to go is the US, because this is where you have massive upside potential.
So, Ipek, the clients that are calling you, are they saying they want to add to Nvidia, for example, as a name at these particular levels, or do they just keep their exposure where it is?
Well, to be perfectly honest with you, I don't have clients who would like to sell Nvidia, but at the current levels, people are more skeptical about entering into the Nvidia shares. What I mostly hear is what level would be a good entry level if we start seeing a price pullback from the actual level. So people will still be buying Nvidia shares from this point on, but they're still at this valuations, at this point in time, they will be looking for good entry levels.
Is there other names, smaller chip rivals that you've thought would be a better entry point?
Well, I think that AMD is at a good position right now. Well, obviously, they do not offer the same potential and they do not offer the same margins than Nvidia does. But its share price have come down quite significantly to offer an interesting entry point at the current levels. It's also to be said that AMD is about to launch two powerful chips, one for the end of this year and one for next year. And what's interesting with AMD is they may not be as powerful and as premium as Nvidia chips, but they're clearly going to be more cost efficient. And there are many, many sectors and companies out there that will be looking for more cost efficient and more affordable solutions. And AMD could actually help of filling that gap.
AMD currently trading at 41 times future earnings compared to about a 50 times for Nvidia. Ipek Oskadeshka, thank you so much for your time, senior analyst at Swissquote. Now coming up, Bitcoin, nearing $100,000 as the Trump team is looking towards creating a new crypto role. More on that next. This is Bloomberg Technology. Bitcoin's massive run. Well, it's seen the digital asset edging now towards $100,000. This, as the Trump team is said to be mulling over creating its first ever crypto role that would oversee cryptocurrency policymaking. More, Bloomberg's Kaylee Lyons joins us now. So just what is being weighed right now?
Well, a lot of it, Caroline, is still up in the air. Yes, this would be the first crypto-specific role in the White House, and in many ways, this would signal that Donald Trump was serious about the crypto-related promises he made on the campaign trail, which, of course, included making the U.S. the Bitcoin capital of the world, firing the current chair of the SEC, Gary Gensler, and he also had said he wanted to make the first ever crypto presidential advisory council. So in some ways, it shouldn't be all too surprising that he is looking at a role like this, but it's not abundantly clear at this time what form this would actually take, if this is going to be an actual White House staff position or just someone who is more of a crypto czar, quote unquote, if you will. I was speaking to a source on this morning who said, yes, this is all very up in the air. They are seriously looking at this, but it's just not clear what kind of power would come with this role. If they are going to have actual staff reporting into them, for example, if they will just be advising, or if this really ultimately is going to be about liaising and coordinating. And by coordinating, I mean all the different parts of government that are involved in overseeing crypto here. So between the White House and Congress, who would actually write digital asset legislation, or the White House and other agencies that have jurisdiction over this, like the CFTC and the SEC. And I would just point you, Caroline, to the tweet from Kristen Smith, the CEO of the Blockchain Association yesterday. She posted on X and she said, look, the crypto czar idea, quote unquote, is a great idea, but ultimately they can only actually do things if there is a strong Secretary of the Treasury and SEC chair to go along with that. And of course, Caroline, we have not gotten picks for either of those roles from the president-elect yet.
So a lot of this is signaling, Kaylee, but just remind us on the campaign trail, some of the promises to make the US the crypto capital of the planet, to make mining ever more focused here in the United States, to have even, well, a reserve of Bitcoin. Is that necessary to have Congress make moves, or can this be done from an executive order from a White House only led position?
Some of it can, in that the president obviously has the power of appointment. So he could put in place a more crypto-friendly SEC and CFTC chair who would be more lenient with the industry, perhaps, than we have seen in the Biden administration. But a lot of this will come down to Congress as well. It was actually part of not just Donald Trump's campaign platform, but it was in the Republican Party platform that was adopted at the convention in Milwaukee this summer, that they want to end what they call Democrats' un-American crackdown on the industry. So that would signal that this is kind of more of a government-wide effort than just what's going to be coming out of the White House. And Congress will be really important here, as they have the law-making power in terms of actually delineating jurisdiction between these different agencies that kind of have been jockeying for control over it. And the chairmanship of the House Financial Services Committee is something we should pay attention to. It's going to be decided in the next few months as the 119th Congress comes in. Chairman currently Patrick McHenry is going to be leaving the House, and there's kind of a three-way battle going on between Congressman Bill Barr, Andy Barr of Kentucky, Bill Huizenga of Michigan, and French Hill of Arkansas, who currently leads the subcommittee specifically on digital assets. And so whoever is chairing the Financial Services Committee will have a lot of control over the shape of the legislation that ultimately could work its way through Congress. And that's going to be what a lot of the industry's lobbying time is spent specifically on.
And industry lobbied going into these elections, and it worked. I mean, the money that was put to work backing crypto-friendly Congress people is important, right?
Absolutely. I mean, you look at PACs like Fair Shake, for example, that deployed tens of millions of dollars in some of those key congressional races, including, for example, a successful ousting of the current chair of the Senate Banking Committee, Sherrod Brown of Ohio. He was ousted not just by any candidate, but a crypto entrepreneur himself in Bernie Moreno, the incoming Republican Senate designate or Senate elect. So that is going to be really interesting to watch. As I mentioned, the House Financial Services Committee, the Senate, of course, is going to be where a lot of the uphill climb has been historically when it comes to advancing the interests of the crypto industry. And Tim Scott will now be taking over as the Senate banking chair. I would just point out that the ranking member could very well be Democratic Senator Elizabeth Warren, who faced a crypto opponent of her own, but won ultimately her reelection race. And she may have a little bit of a role in at least effort in attempt to pull back some of the efforts to advance the industry's interests. But the crypto money that was active in this election cycle has no sign that it's going anywhere. Now that they've proven that they actually can make a difference in outcomes here, we'll be watching to see how this PAC and other interest groups and the others individuals who were contributing to it, think Mark Andreessen, for example, or Brian Armstrong, how active they will be in the midterms in 2026 and then ultimately in the next presidential cycle in 2028.
Always pushing us forward. Kayleigh Lyons, we thank you. Now let's talk about artificial super intelligence. Perhaps it's not far off. Last month, SoftBank CEO Masayoshi Son predicted that it would become a reality by 2035. Well, former Google CEO Eric Schmidt, who is out with a new book on artificial intelligence, says it might be coming even sooner than we think. Take a listen.
It's probable that we can build systems that are, the technical term is super intelligent, where you have a single system that is at the 90th percentile of physics, math, chemistry, and arts and so forth. No human can do that. It looks like these systems will be not only available in the next 5 years, because we already have examples of passing these tests already, but also that they'll be broadly available for all of society.
A bit more on AI now, because happening today in New York, the Evident AI Symposium, where some of the most senior leaders of the world's banking and artificial intelligence areas came together. They're discussing the realities of AI adoption in the banking sector based on the latest data from the Evident AI Index. It's a global standard benchmark for AI maturity in banking. I sat down with JP Chase Chief Data and Analytics Officer, Teresa Heizenrather, and asked if, look, the efficiencies from AI are the #1 return on investment. Take a listen.
The magic question is, what's the return, right? And the answer is very, very difficult to quantify. And I think at this stage of the game, the return is a little bit of efficiency for a lot of people every day, but not something that you can actually hang a number on, right? So I think that the next generation of where we see this heading is, rather than just using it to help you write your email or summarize a document, is when we start to plug the technology into knowledge bases. When we start to actually look at the workflow of a particular person or group and link together the steps in that workflow with the tools that they need to be able to do their job. So you basically go from the 5 minutes of efficiency to the 5 hours of efficiency. That's a road. Like, that's going to take some time to actually get there, but I think that's where we see it evolving. So there are near-term benefits, but I think the most compelling is just putting the technology in people's hands and letting them start to experiment and understand how it actually works and how it can be used.
JP Chase Chief Data and Analytics Officer, Teresa Heizenrather there. Meanwhile, coming up, it's official. The DOJ does want Google to divest its Chrome web browser. All details next. This is Bloomberg Technology. The Justice Department and a group of states do indeed suggest that Google may have to divest its popular Chrome web browser and impose limits on its Android operating system in order to address antitrust concerns, all confirming earlier reports by Bloomberg. For more now, Bloomberg's Leah Nyland joins us. And it was your reporting that ultimately has been confirmed. Just take us through how realistic still this divestment would be.
We'll see probably in early spring. The Justice Department has said that they want Google to be forced to sell off Chrome. It's not clear who would buy it. You know, the top two other browser makers, Microsoft and Apple, who have the cash, the Justice Department probably wouldn't want to let them. So the next, most obvious candidates are probably people like OpenAI or Perplexity or some of the other AI startups that would really love to have this kind of an avenue to customers for their AI search goals. Other things that the Justice Department put in there is that they want Google to have to license a lot of its data. That's probably a more realistic thing that would have to happen, and it would definitely give a boost to other search engines and possibly AI startups who would now not have to scrape the web themselves.
Alphabet, once again, one of the key drags on the NASDAQ today. Investors worried about this. Alphabet itself worried about it, coming out and still once again trying to say that this is a radical turn of events if imposed. How complex is it to actually see a company sell off such businesses? And how much do we have to now wait for the legal maneuvering to play out? They now have, a couple of months to respond?
Yeah, they have until next month to respond. And then the Trump administration in March gets to have another reply. So if the Trump administration wants to change this proposal a little bit, they are allowed to. We probably won't have a decision from the court until next summer. The judge has promised that he will rule by August 2025, but then Google says it will appeal. That'll take another year. So at the earliest, we're looking at them having to do this in probably 2026. But I think people are recognizing that Chrome is actually pretty important to Google's business. It is, an avenue through which a lot of people access its search engine, but it also is how Google collects a lot of the data that underlies its advertising. Whenever a user logs in, it keeps a lot of information about the browser history, where people are going online, what they're looking at, and then Google uses that data to help sell advertising. So this could have knock-on effects to how some of Google's core businesses.
Leah Nyland, appreciate the update. Thank you. Now it's time for Talking Tech. And first up, we're talking PDD. Shares, as you see, plunging after warning that its profitability will trend downwards over time because of intensifying competition in its home market, of course, of China. PDD, which competes with Alibaba and its team, is struggling to catch up with unspecified rivals because of the lack of expertise. Speaking of which, Alibaba has appointed veteran executive Jiang Fan to oversee its entire online e-commerce operation. Now, Jiang will lead a newly created department that consolidates Alibaba's online shopping assets, making him the most powerful person in the company after the CEO and chairman. And Baidu, it recorded its biggest revenue drop in more than 2 years after China's economic malaise undermined its push into generative AI. Now, the company's ErnieBot has fallen behind ByteDance's Duobao in China usage, while its core business is losing ground to newer social platforms, off by 7%, as you'll see. Now, coming up, we're going back to the US earnings story. Nvidia, the impact on the chip sector at large, we're currently off by 1.3%, 1.2% for the world's most valuable publicly traded company. This is Bloomberg Technology. Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York. Let's get back to it. Nvidia's earnings. Here is the reaction from just some of our guests on Bloomberg Television.
I have a feeling that we've reached peak Nvidia.
How long can you stay perfect, right? So I think that, I do think that a lot of investors are expecting a little bit too much.
There's a little bit of this kind of fatigue, but make no mistake, this was a remarkably good quarter.
What they're putting up in terms of Hopper, in terms of overall growth, it's exactly what the bulls want.
Never underestimate Wall Street's ability to miss the bigger picture. This company has double the operating margin of any other Mag 7 outside of Microsoft. To nitpick Nvidia on those margins is truly missing the big picture.
Let's nitpick some more. Daniel Pilling, portfolio manager and senior technology research analyst at Sands Capital, joins us now. And Daniel, we're quibbling on a margin of 75% going to somewhere to 73 to 74%. So much more profitable than rivals.
Yes, hi, good morning. Yeah, so, well, I think actually the gross margin stuff is largely behind us. They've guided for sort of 75% exiting the year. And I know this was a concern a while back, but I would actually argue it's somewhat, frankly, irrelevant. I think what was much more important was two things. First of all, the company noted that the scaling laws are well and alive, and that we can both scale training and inference going forward. So this entire discussion about are we hitting a wall is sort of probably off, and there's just many walls and they're far away. And then the second really important thing I thought that they mentioned is to say that data centers are becoming a little bit like smartphones, i.e. they are electricity constrained. And what that means is just amazing, right? Because that means every year the hyperscalers have to buy a new chip because a new chip is better in terms of electricity usage. And we've never had that before in the data centers. So those two things I think are very positive for the medium and long term of the company.
I want to go back to the scaling laws, Daniel, because yes, we've heard Jensen Huang actually back on the conference trail just earlier this week talking about how compute power is going to continue to extend. And indeed, the more data, the more compute you have, the more sophisticated the large language models will become. But then you listen to the reporting out of Bloomberg around OpenAI and the latest iteration of large language models just stuttering a little. Why are you so confident that scaling laws are still in place?
Yes, so I think the key thing to note here is that all that information that we have is based off of smaller clusters. So now we, for the first time, have a cluster that's something like 100 or 200,000 GPUs that is owned by Elon Musk. And we'll see what comes out of that in the next 12 months. And secondly, and more importantly, maybe, the Blackwell clusters start at 100,000 GPUs. Hopper started at 10,000 GPUs. So we'll have to wait the next 12 months. What can we train with these much better chips and much larger clusters? And whatever comes out of that, that is the crux. So I think most of the stuff that's in these articles is kind of backward looking because we just didn't have the chips nor these big clusters yet.
There has been reporting about the latest valuation of XAI and the fact that they're raising money simply to buy more GPUs. But there is that worry about density of customer for Nvidia. Are we going to see a broadening out?
Yeah, so I think the big question here is like this, and I think you're right. So the big customers are hyperscalers, venture finance, startups, and actually healthcare companies are using training a lot too. My sense is that the most important thing to look at here is for the next year is agentic AI, and this idea of that we're spending much more compute on inference and letting inference think. And I think it's starting just now. And if we can see this, then companies can really start using this via using ServiceNow, Workday, Microsoft, et cetera, et cetera. So I think that might be a big tipping point, and we're literally at inning one of that. And just to be clear, agentic AI is this sort of this AI that can do things autonomously within an enterprise and help with workflows.
We've heard a lot about agents from the likes you mentioned, ServiceNow. We've also heard it from Salesforce and the like, Daniel. So when we look at your funds managed, what are the top holding is Nvidia. Does that start to broaden out for you? Or do you remain comfortable with your alignment on Nvidia, even though it's at, what, the most valuable market capitalization in the entire world?
Two things. One, so I think there's a good scenario to be made that Nvidia becomes the first $10 trillion market cap company. And I'll tell you why. I mean, even if we just look at the top 4 hyperscalers, they're estimated to generate about $300 billion of free cash flow next year alone. And what I'm trying to say is there's a lot of dollars left to go to Nvidia if the scaling laws hold true. So that's one. We're very bullish on Nvidia, or continue to be positive on Nvidia. But two, the trends are really proliferating into other spaces. And maybe I'll make 2 comments there. First of all, the software companies, ServiceNow, Microsoft, et cetera, they will benefit. But there's also other companies, that have significant competitive advantages, and that can really take AI and monetize it, right? And one great example might be a company called Axon that manufactures tasers and cameras for the police force. They've added an ability to transcribe, police when they're engaged with people, and that saves 40% of time for that police officer. That's a huge improvement, and the stock has started to price them in as an AI winner, and I think you'll see more of that over time too.
Another company for us to focus in on for our audience. Daniel Pilling, so great to have time with you, Senior Technology Research Analyst at Sands Capital. How interesting that he kept referencing inference. We're going to have a conversation on that now, because we have a perspective from someone in the field. Rodrigo Liang, CEO of Sambanova, is an AI infrastructure company that delivers advanced AI solutions for enterprises. You're kind of an Nvidia competitor, upstart, and I just want to articulate for our audience what it is that you do.
Yeah, no, thanks for having us. So Summit was started as a startup coming out of Stanford University in Palo Alto, really focused on efficient computing. And so as we're seeing NVIDIA scale, and you see all the great numbers that people are talking about with NVIDIA, what we're now seeing is what happens when the world wants to go into production and go into scale. And one of the things that, frankly, we're not talking enough about is the fact that power and energy is going to be a big bottleneck. And, people are talking about building nuclear power plants and things like that. SummitNova took the focus of how do we actually take AI at scale, power efficiency, and drive it down so that you can actually scale without running into these limits that we start seeing with both companies and countries running out of power and figuring out how to actually provide enough energy to supply these GPUs.
So your view is you can't, there's going to be a certain limitation on the amount of energy efficiency that a company like NVIDIA is ever going to hit with a GPU, whereas you offer what?
Well, so today, for example, a single rack of NVIDIA is north of 100 kilowatts. And just to give your audience a sense, that's 100, it's 100 homes that it powers. And so if you think about SummitNova technology, we're able to drive 10x the performance at 1/10 the power.
How?
Now, because of a completely different architecture. As you know, with NVIDIA, it's an architecture that's been around for several decades. And so we're trying to evolve this graphics GPU architecture into AI-enabled. Now, for inferencing, there's so many new techniques that you can actually apply because you don't need to do all the heavy computing that training requires. And so you're able to drive a much, much lower footprint in terms of power, in terms of cost, in terms of space, which ultimately is required when you're actually going to scale. And my belief is AI inferencing is going to be 10 times more of a footprint than training. And so I think we're going to have to think about how to be energy efficient, how to be cost efficient before it gets to the scale that everybody gets to have it.
Can you, for our audience that is not only an investing audience, but really a technologically savvy audience, describe to us what it is that's different, that enables this higher energy efficiency within your particular type of technology? Because it's not GPU at all. What is it?
Right, it's not graphics. And so it's something that was invented and researched at Stanford University. It's called data flow architecture. And what it does, it allows you to actually map the hardware in the way that a neural net wants to operate. And so with NVIDIA today, you're having to break up these neural nets into these cores that exist inside the graphics chip, which turns out to be a lot of work, a lot of energy, a lot of power. SummitNova, with the data flow architecture, allows you to avoid all of that extra power that's being incurred when you actually break up these neural nets and let it flow through the machine. And so you're getting these order of magnitude improvements in power efficiency, which ultimately allows you to be able to deploy these in existing data centers, which, by the way, is one of the things that I think is not talked about when we actually acquire GPUs, because you also have to upgrade the data centers where, for our technology, going into existing data centers with existing power grids, with existing cooling systems, it becomes one of those things that allows us to generate value for enterprises really, really quickly.
What enterprises are you already locked in with? How are you managing to sell this narrative into corporates and federal government?
Yeah, we're as a startup. Again, NVIDIA is at the top of the tier. We're a startup that's coming in and providing disruptive technology. We're the most deployed in the U.S. government today as a startup. We're going to national labs and places like that. And today we power also Saudi Aramco's MetaBrain. So their internal GPT. This is a private GPT with data trained into it and now operating air gap within the company. And so companies that are worried about their data, their security, their privacy can now train these models on a SummitNova platform completely securely and then deploy it within their own infrastructure because you don't have to expose the data outside your firewalls.
There are other startups in this space, or indeed trying to offer more energy efficient options. Ampere, for example, also backed by Oracle. You yourself used to work at Oracle. Right. I'm interested as to what your next step is to really gain market share. Is it about raising funds? I know you've got big VC backing, for example.
Yeah, I think it's a really good point. My belief, when we started the company back 7 years ago, is about access. When democratize AI, you got to make it available to everybody. As your previous guest just said, is today NVIDIA is really in large scale only to a few customers. What we want to do by collapsing the power is to be able to make it available to everybody, to make it easily available, and that means lower cost, much lower power, and then able to deploy in very tight spaces and not needing a gigawatt data center. And so SummitNova, we focus very much on completely restructuring the power requirements of the AI infrastructure so they can deploy racks at performance that much higher than Nvidia, not less than Nvidia, but much higher than Nvidia and much lower power.
Sam Manova, Rodrigo Liang, CEO, talking about some of the alternatives out there to Nvidia. We thank you for coming on. Meanwhile, coming up, Palo Alto Networks earning. They are looking at the first quarter that is proving itself with this focus on platformization. We'll dig into that word in a moment. CEO Nikesh Arora joins us. This is Bloomberg Technology. Cybersecurity company Palo Alto Networks releasing earnings after the market Wednesday. And look, we're seeing revenue climbing 14%, earnings climbing 13%. We're seeing a focus on platformization and also a stock split. We're currently up 1.25%, but let's get to the details with the CEO, Nikesh Arora of Palo Alto Networks. We've had some volatile trading, but the market now pushing you higher. And I'm just interested on the nuance. You are trying to tell a different story to your investors. You're talking about platformization, you're talking about bundling, but still they want to turn to your billings number. How do you manage to get that across to them that stop looking at it? Because there was a little bit of worry about billings.
Well, first of all, thank you for having me, Caroline. I appreciate you saying the word platformization because this is something we've been trying to tell the market. I think we are seeing a sea shift in the cybersecurity industry where people are tired of buying point products which are not solving the problem of today. You have to make these products work together. And I was listening to the conversations before this. Everybody's talking about AI. AI in our business means things are going to happen faster, attacks are going to happen faster, you're going to have to resolve them faster, which means you need a common language, you need common data, which actually points towards integration and stuff that works together or points towards platformization.
A cloud platform strategy that seems to be earning you plenty of companies. What is it? Cumulative, you got 1,100 platformizations.
Yes.
Ultimately, is that more valuable? Is that more revenue generating? Because people are worried that maybe within this bundling, there is some discounting going on.
Well, I think it's important to understand, once you deploy a platform and it works well for you, you're not going to replace it. So we've coming from an industry where you look, we've had companies that have worked well for 8 or 10 years, but they've been through a cycle, and then you have to replace them with a net new set of vendors because the last ones didn't stay innovative enough. What we're trying to do is we're trying to stay evergreen, we're trying to be innovative, and we're trying to make sure we embed the platform as part of your security solution that you logically come to us for the next piece of innovation, and you don't have to go through a huge process of constantly transforming your security estate. Today, more customers have security transformation projects on tap than any other technology transformation because the security landscape is constantly changing.
Let's talk about the cyber landscape and whether it changes with a new administration. Is there going to be more consolidation? Is there going to be more deal making from you?
Look, I think you could parse that in different ways. I'm watching it like everybody else and saying it sounds like we're going to see the new Doge go out and do a lot of cost cutting and deploying a lot of technology. Now, traditionally, the federal government in the United States has been slow to adopt new technology, rightfully so perhaps because they want to sense their way through it. But as you see efficiency, as you see technology investment happening, it has to be secure. So I think security gets a knock-on benefit if we actually see a technology wave coming from an administrative perspective. Do I expect regulations to get easier? Possibly. From an M&A perspective, do I expect that things will move faster? Hopefully. So I think generally it should sort of bode well for all of us in technology, but we'll all find out. We'll wait and watch.
Look, as you innovate, as particularly within the world of generative AI, we manage to get more sophisticated cyber protection. You're also getting more sophisticated hackers. The US government has just flagged some flaws with Palo Alto's own products that might have been exploited by hackers. Can you just tell us a little bit about whether that was a realistic one for you, what patches have been made?
Well, look, what happens is because we're coming from a hardware industry where we sell products, customers deploy them, there's a long product cycle, and you've seen this across the industry. At any point in time, there's always some bug that is out there that needs to be patched and fixed. So we're very good about making sure we work with our customers. We have full visibility into who has what product. We're able to work with them to patch those things. I think as we move from a hardware-based solution business to a software business, which the world is moving to, that becomes a lot easier to fix. So I think software beats hardware from a security recency perspective all the time. So as the world transforms there, we'll see less and less of that in the future.
As the world transforms, everyone becomes an investor, retail community as well. Talk to us about your 2-for-1 stock split. You're already up, 30% on the year. Is that why you split it out? Is it about giving more access?
Well, we want to make sure that there's ample access to our stock to retail investors. 5 years ago when I started, we were a sort of a niche name in the cybersecurity industry. We're delighted that we are now part of the general conversation. We want to make sure everybody has access to our stock.
Well, for now, we'll currently see it's going to be action in a 2-for-1 stock split. We'll see how much adoption there is around that. But Nikesh Arora, on the fundamentals and some of the share moves, CEO of Palo Alto Networks, we appreciate your time today. Thank you. Coming up, more earnings. Snowflake giving a pretty strong outlook for its product sales growth. We dig in. This is Bloomberg Technology. More earnings for you. Snowflake shares absolutely jumping after the company gave some pretty solid sales outlooks for us, suggesting newly launched products are receiving a strong reception from customers. Brody Ford has the inside take. I mean, extraordinary move to the upside from Snowflake. We know it's a volatile stock, but what's managing to win over customers, Brody?
In software right now, the big question is who gets left behind in the age of Gen AI? For a long time, investors worried that Snowflake was focusing on maybe a too narrow slice of the data market, the services used to kind of organize and analyze all your data. And Snowflake is successfully making an argument that no, in the era of Gen AI, when folks need to understand such a wide array of data and turn it into interesting applications, we will remain a platform where they spend their money and make their decisions. And so that's what investors are reacting to in these results.
They organize, they analyze your data, but when it comes to unstructured data, they're having to make purchases here. It's a bit of M&A.
Yes, so many have heard of this famous rivalry between Snowflake and Databricks. For a long time, the argument was that Databricks handled the unstructured data better. And that's the real something that's not in a spreadsheet, something that's real disorganized. Maybe it's a bunch of Google Docs you want to be able to scan through and say, hey, give me insights. And so Snowflake has worked to beef up their ability to deal with that kind of hard to access data. And yeah, last night we saw them make an acquisition of a startup that focuses specifically on ingesting this kind of messy, unstructured data you need for a lot of Gen AI use cases.
I know that you've reported a lot on that rivalry, so we'll see if that M&A does indeed help. But under the guidance of the new leadership and Ramaswamy, he's also trying to integrate large language models, right? How is this being seen in the Anthropic deal?
Exactly. They want to bring more LLM access right into the Snowflake platform. So if you want to do things like, again, scan through all your information and pull out insights, make dashboards, make visualizations, you can do it right in Snowflake. You don't have to go open up a new, Azure instance or leave the platform. So bringing Anthropic models right into Snowflake is, again, hoping to make it a platform where you remain, where kind of your most important data lives. They really hope to be a center of gravity for all your information and not just something you use when you want to make a analysis of a spreadsheet somebody sent to you.
Brody Ford, across these Snowflake moves and indeed some of the intricacies in the earnings, we thank you. Look, let's just get a broader perspective of how Snowflake's 30% to the upside fits into what's happening more broadly across the NASDAQ. Because, look, it hasn't been a round out, risk on kind of a day. In fact, we've been pulled lower by about 0.2%. In large part because of Nvidia's off by 1.7%. Alphabet, too, on the back of that formalization of Bloomberg reporting that indeed the DOJ does want it to be selling off Chrome, for example. But Nvidia off by 1.7% is important because it is the most valuable company. It is going to have a huge points perspective when it drags lower. But look, we were anticipating in the options market as much as an 8% swing, upside or downside. So this is relatively stable, shall we say, after earnings did show a 94% increase in revenue, a 70% increase in revenue for the guide, and margins being pretty strong. Interestingly, the chip sector is up some 0.7%, so the rest of the market doing well today. Have a look at what's happening with Alphabet, because the parent company of Google off another 6.8% today. Once again, this anxiety surrounding antitrust and how it might have to be split off weighing on the stock. That does it. for this edition of Bloomberg Technology. A lot to get through. You want to check it all out again on the podcast. You'll find it on the terminal, as well as online on Apple, Spotify, and iHeart. This is Bloomberg.